All right, let's dive into this. Vietnam's economic outlook for 2025. You've sent over a really interesting mix of reports and forecasts. I'm excited to dig in, especially with you here, to help us break it all down. We're looking at, well, let's see, GDP growth, the VN index, and how foreign direct investment plays into it all.
Mm.
Of course, always thinking about what this means for investors like you out there listening.
Yeah, it's a fascinating time to be focused on Vietnam. You can really feel the energy, the ambition, but there are also some pretty complex global trends to consider.
Right, absolutely. Let's start with the big picture then. That OECD report, it seems pretty positive overall. Global GDP growth projected at 3.3% in 2025. Developed economies, especially the U.S., look like they're driving a lot of that. The projected 2.8% growth rate.
hmm
But then there's this whole U.S.-China trade war thing kind of looming in the background.
Exactly. And the way the OECD is assessing the anxiety around that is pretty interesting. They're not just looking at the usual economic indicators. They've actually brought in AI to analyze sentiment.
Wow.
Yeah, so by tracking how often trade war is mentioned across global news, they can actually quantify the level of concern, and it's definitely heightened.
Huh, that's a clever approach. It's like, what, taking the pulse of the global conversation.
Yeah.
But for someone who's specifically interested in Vietnam, what does it all really mean?
It means that even if the overall economic climate is good, you can't look at Vietnam in a vacuum. Investor confidence, it can be swayed by these geopolitical tensions, and that has a very real impact on their decisions.
Context is key. All right, so let's zoom in on Vietnam itself then. The government has set this, well, pretty ambitious GDP growth target of 8–10% for 2025. That's a huge jump, isn't it?
Yeah, it definitely shows a leapfrog kind of mentality. Vietnam wants to do more than just ride the wave of global growth. They're looking to capitalize on it, really accelerate their own development.
So what's behind this optimism? What's giving them the confidence to aim so high?
Well, a few things are working in Vietnam's favor. For one, the global interest rate environment. The U.S. Federal Reserve, other major central banks, they're expected to keep lowering interest rates. And that makes borrowing cheaper, right? Investment becomes more attractive, especially in emerging markets like Vietnam.
It's like a green light for businesses to expand, to launch new projects. Makes sense. Anything else fueling this growth?
Another key factor is Vietnam's real estate market. Now, we know the stock market performance of real estate companies, it's been a bit shaky lately, but the actual prices of physical property, especially in high demand areas, those have kept climbing.
So there's a disconnect between the stock market and what's happening on the ground in the real estate market.
Exactly. And this upward trend in property values, it's expected to continue, particularly with the government encouraging real estate development to hit those GDP goals. It's a bit of a gamble, sure, but they're banking on continued growth in that sector.
Real estate is a big piece of the puzzle. But what about the U.S.-China trade war? We talked about the global anxieties, but how's it playing out specifically for Vietnam?
That's where things get really interesting. In the long term, the trade war could actually benefit Vietnam. Think about it. Companies want to diversify their supply chains, reduce reliance on China. Vietnam looks like a very good alternative. And we're already seeing this play out. Increased foreign direct investment, or FDI, is flowing into the country, particularly in infrastructure.
So it's not just about shifting production from China to Vietnam. It's about building up the foundations for long-term economic growth.
Exactly. And that focus on infrastructure is key because it addresses one of the big challenges Vietnam has faced in the past. Not enough good transportation networks, reliable energy, and, well, just too much bureaucracy.
It's like paving the way, right, for smoother, faster economic growth. But what about the short-term impacts of the trade war? Is it all positive for Vietnam?
There's a bit of a paradox here. While the long-term outlook is good, in the short term, let's say the next 2 quarters, the trade war might actually boost Vietnam's exports to the U.S.
Okay, now that's intriguing. How does the trade war boost exports?
Well, imagine this. Businesses are worried about potential tariff hikes in the future, so they might decide to stockpile goods from Vietnam now while they're still relatively affordable. This could lead to a spike in demand for Vietnamese products, at least for a while.
It's like a pre-trade war shopping spree for businesses trying to get ahead of the price increases.
That's a great way to put it. And we've seen this kind of pattern before. Back in 2017, 2018, after Trump's election, but before tariffs actually kicked in, Southeast Asian exports to the U.S. jumped over 15%.
So history suggests this could work out in Vietnam's favor, at least temporarily. All right, so we've got this mix of global trends, ambitious GDP targets, and the trade war throwing in some curveballs. But let's get to what all this means for investors, especially those interested in the Vietnamese stock market. What's the outlook for the VN index?
Many analysts are feeling pretty optimistic about the VN Index. They're projecting some significant growth in 2025. The positive economic factors we've been talking about, plus growing investor interest in Vietnam, it's all fueling that optimism.
But how much of that optimism is, realistic? Weren't there similar predictions for 2024 that didn't quite pan out?
That's a good point, and it's always smart to be a little skeptical about these predictions. The VN Index did grow, something like 12.75% in 2024, but it didn't hit those huge numbers some people were expecting, so we need to be realistic about the potential.
So no need to jump in blindly. What would be a reasonable expectation for growth in 2025 then?
A growth target of around 1,380 points, up from the current 1,280, seems plausible. It lines up with the general economic trends, but it's also, tempered by realistic expectations. It's important to remember, emerging markets always come with some degree of risk.
Right, of course. But let's get a little more personal for a second. You mentioned you have a colleague who manages funds at VCAM.
Yeah, she's had a really impressive track record in the Vietnamese market. Her strategy is all about long-term strategic investments. She focuses on well-managed companies with strong fundamentals. It's not about chasing the latest fad, it's about finding companies positioned for sustained growth.
That sounds like a very solid approach.
It's about understanding the nuances of the market, finding those hidden gems that other people might miss.
So it's not just about riding the wave of Vietnam's overall growth. It's about being selective, strategic within that market. That makes a lot of sense. So it's not just about riding the wave of Vietnam's overall growth. It's about being selective, strategic within that market. That makes a lot of sense. But let's flip the script for a second. We've talked about the good stuff, the things driving Vietnam's economic outlook. But what about the potential downsides, the risks that investors should keep in mind?
Yeah, that's a really important question. No investment is risk-free, and Vietnam is no different. One potential vulnerability is its reliance on real estate. We talked about the momentum in that market, but we have to acknowledge that being too dependent on any one sector can be risky.
So the very thing driving a lot of the optimism, it could also backfire if things change.
Exactly. If that real estate bubble were to burst, for whatever reason, it could have a domino effect on the whole economy.
It's like building a house on a foundation that might not be as solid as it looks. What other challenges are you watching out for?
Another one is infrastructure. It's getting better, but it still has a ways to go to really support the kind of rapid growth Vietnam is aiming for. Things like limited transportation networks, energy shortages sometimes, and all the bureaucratic hurdles, those can create bottlenecks and really slow things down.
Like trying to run a race with weights on your ankles. You might still make progress, but it's going to be a lot harder.
That's a perfect analogy. And then there's always the risk of a global economic slowdown. Even if Vietnam is doing well internally, it's still part of the global system. Any big downturn would inevitably affect Vietnam too.
So investors have to keep an eye on both the local and the global picture.
Absolutely. Investing in emerging markets, while it can be very rewarding, it always comes with some level of risk. Vietnam is no exception.
Okay, so we've got these potential challenges. Over-reliance on real estate, infrastructure limitations, and the global economic vulnerability.
What's the bottom line for investors? How can they navigate these risks and make good decisions?
I think the key is to be balanced,
Yeah.
Have an informed perspective when you're investing in Vietnam. Do your research, understand the companies you're putting your money into, and diversify your portfolio. Don't put all your eggs in one basket, as they say.
Speaking of baskets, you mentioned that VCAM is hosting an investor event on January 13th. That sounds like a great opportunity for people to really dig into the Vietnamese market, learn more about specific investment strategies. It is. They'll have some of the top experts on Vietnam sharing their insights. It's a great chance to network, ask questions, and just get a more in-depth understanding of the market.
So mark your calendars, folks, January 13th, if you're serious about exploring investment opportunities in Vietnam. But before everyone runs off to invest, let's take a minute to recap what we've learned today.
We've covered a lot. We started with that global economic outlook where the OECD is predicting solid growth, but also pointing out those concerns about the U.S.-China trade war.
And we saw how those global dynamics are playing out in Vietnam, both as a potential source of opportunity and as a risk.
Exactly. Vietnam's government has set some pretty ambitious GDP growth targets for 2025, and they have a few things working in their favor. Low global interest rates, that booming real estate market, and the possibility of more FDI because of the U.S.-China trade war.
But we also talked about the importance of considering the potential challenges. That overdependence on real estate, the infrastructure limitations, and the fact that a global economic downturn could happen at any time. It's a complex situation, but I think we've shed some light on the key factors that investors need to think about.
And that's really what a deep dive like this is all about, isn't it? To give you a more nuanced, informed perspective than you might get from just skimming the headlines. We've given you the pieces. Now it's up to you to put them together and make your own informed decisions.
We've given you the knowledge, but ultimately, the decision to invest is a personal one. It should be based on your own risk tolerance and your investment goals.
And remember, the learning never stops. The Vietnamese market is constantly changing, so it's important to stay informed and be able to adapt.
Absolutely.
Yeah.
So keep exploring, keep learning, and don't be afraid to ask questions. That's the great thing about investing. It's a journey of discovery. But before we wrap up completely, we want to leave you with one final thought-provoking question. We've talked about how Vietnam's reliance on real estate for economic growth can be both a strength and a potential vulnerability.
A real double-edged sword.
So given everything we've discussed, how do you see that tension playing out over the next few years? What should investors be watching for?
Well, that's the million-dollar question, isn't it? It really comes down to how the government manages this growth. Can they diversify the economy enough to build a more balanced foundation?
So it's not just about the real estate market itself. It's about the bigger economic policies and how they support sustainable growth.
Exactly. Investors should be looking for signs that the government is, taking steps, addressing those infrastructure challenges we talked about, attracting investment in other sectors, basically creating an economy that's not so reliant on real estate, that can weather the storms better.
It's about looking past the surface excitement and really digging into the fundamentals, the underlying strength.
Right. And that's where events like the VCAM Investor Conference can be so helpful. You get to hear from experts who are actually on the ground in Vietnam. They're seeing these trends firsthand. They can offer insights you just wouldn't get from reading reports.
Like getting a guided tour of the Vietnamese market, led by people who really know the territory.
Perfect analogy. And remember, the great thing about investing is it's a constant learning process. The more you understand a market, the better decisions you can make.
So keep those brains working, stay curious, and don't be afraid to question what you think you know. Who knows, maybe we'll see some of you at that VCAM event on January 13th.
Would be great to connect there. Until then, happy investing, everybody.
And happy learning. Well, that wraps up our deep dive into Vietnam's economic outlook for 2025. We hope you found it useful, and as always, keep exploring.